What are you reading right now? Well, on the top stories on the Bloomberg terminal outlines the free fall in hedge fund fees. That's as the industry's hit with $55 billion worth of withdrawals in just the first half of the year alone. Now, some like D.E. Shaw have been able to raise their fees, but for most, that 2 and 20 fee model is definitely a thing of the past. Well, joining us now is Andrew Beer, Dynamic Beta Investments founder. His company is a pioneer in the hedge fund replication, which copies hedge fund strategies while charging lower fees. So the hedge fund guys probably pretty much hate you, Andrew. And I guess the question is, why did fees get here? Like, how did we get to this 2 and 20 model that then just totally kind of fell apart? And where does it go from here?
It's a very good question, by the way. I thought the article was terrific. The central issue is back in the 1990s when the hedge fund business was just starting, and when I started in 1994, the industry was 1/10 of the size today. The 2 and 20 model was really designed for smaller funds. So if you were raising a $10 million, $20 million fund from family and friends, having a high management fee really allowed you to cover your expenses. And then if you did really well for your investors, you'd participate in the profits. As the business has become institutionalized, I think people have not done enough work in terms of re-examining whether the fee structure makes sense. And so what you've seen over the past decade is people continuing to follow the existing fee model, even as funds have gotten large. And what it's really meant in what we think is actually quite a shocking way is how much people have overpaid for hedge funds consistently over the past 10 years, despite relatively disappointing performance for many strategies.
Andrew, has the pension fund industry been asleep at the wheel?
I don't think they've been asleep at the wheel, and actually, some pension funds have really led the effort to try to think in a really rigorous and constructive way about when it makes sense to pay high fees and when it doesn't. But I do think there's a broad issue in the industry in that most pension funds, the people who are making allocations, it's not their money. And if you were to go out and buy a house and somebody was going to make the decision for you, they would have a very different view on what you should pay than if it's actually your money. And I think within the pension fund community, what you haven't seen is really aggressive disclosure of exactly how much people are paying. And so as a result, people tend to worry about fees after the fact. They invest in a fund that's been doing well. It underperforms over the next 5 years. And then consequently, they worry about the fact that most of the profits have gone to the managers. And as was highlighted in the article, Al Born and some others have really taken a much more rigorous approach to this. And I think it's been very good for the industry.
So as an investor, how would I know what the right fee structure should be?
It's hard. It's not easy it really requires, it's sort of a complicated answer. But when we think about it, I think one of the things that was really interesting about the article is not how much fees have come down, but why they haven't come down more. So if you think about it, the numbers in the article basically showed that if you were paying $10 in hedge fund fees in 2008, you're paying about $8 today. But if the right number is $4, you're still overpaying. And so I think what there's been is this wide bifurcation in the industry where some of these flagship funds that were mentioned, they have infinite demand from pension funds who want to get in. They've often been closed, and so they can really dictate pricing, and plenty of people will line up to invest. For a lot of the rest of the industry, though, that's where the pressure has really been. And I think one of the things that's been most positive about the past 10 years is the mentality of allocators has changed from thinking about either I can invest in this hedge fund or not, but are there better, cheaper, less risky, lower cost ways of doing the same thing? And that's really where I think the greatest advances have been.